Hello traders, welcome to the TMT Trader's Edge report for Monday, April 23rd. Well, we had a big week last week for our subscribers, a lot of our coaching clients as well. Made a lot of money. We did really well with the markets, anticipating a move higher Monday, Tuesday, and Wednesday, as well as the oil stocks that we pointed out. Did very, very well. They were lagging pretty much all of the first quarter, and they just started to explode last week. And we're going to see where they go this weekend moving forward. So it'll be a very interesting week to say the least. So day two of the pullback, we had monthly options expiration that was that expired on the 20th. That's the third Friday of every month. And generally, we have a bullish bias to the week, and we did up until Thursday and Friday. Again, just like the previous Friday, we talked about on the research video, very light volume. Market on close orders was about 300,000 for sale. Again, not a lot of selling. A lot of the shenanigans that go on a monthly options expiration, market makers defending their book, meaning their trading account and their positions. So those options that they write expire pretty much worthless, and they get to keep all of that, all of those profits. So we'll see what happens going into the new week. I do suspect that we have more upside probing before we actually start a correction and then into a crash. Okay, but we're going to get into that obviously in today and as the days progress. So we have the VIX, the VXX, really not showing us any fear here. We actually got a major pullback the last 5-6 trading days, and that was just on the underbelly of the TMT proprietary price channels here. So this easily can break lower and get into a $29 or a $30 handle. And that's why I keep saying, if you guys are looking to buy volatility, you don't want to buy it up here. You want to buy it on these spikes, just like we had the spike up, and you wanted to short it. You want the spikes down. That's really what we're looking to do here. So you want these large spikes down so you can average into a really good VXX trade long. So if you're long volatility, you mean you're looking to short the market. Okay, that's really how it comes down to it. And you can see we're not really we're not really that overextended to the downside. Whereas here we were really deeply overextended, and we were very, very oversold us in the near term. So keep an eye on this VIX here. But again, this is telling me that we still have some upside probing to do in the general market. Now the dollar here really is starting to pick up. You can see we finally broke out of this RSI that we had from October of 2017, almost a good 8-9 months of just literally downtrending and going sideways here. So now we finally are breaking out. What does that mean? Well, that means that commodity prices are going to be affected as well. So we have to pay attention to that dollar. Remember, crude oil is priced in dollars all over the world. So if that were to happen, at one point you're going to get a knee-jerk reaction in crude oil. And we're going to talk about that in the coming days. But I just want to show you what's going on with the dollar. The dollar looks like it's trying to break out of this symmetrical triangle. And if it does, this is a long-term downtrend line here. This would be significant. Your next upside would be the 2406. Again, this is the UUP, the dollar ETF. You can also track the dollar by the DXY, okay, if you obviously need to. So we got a bunch of commitment to trader reports, and S&P, the big lot S&P, again, have the producers extremely long the S&P, the big lot S&P. So that actually got, they increased their long bets in the S&P, right? Now this is the S&P, the big lot, right? But the ES, the producers increased their short bets. It's just very odd what's going on with the commitment to trade reports, where you have the minis, the E-mini S&P stock index, you have extremely short the producers, where you have the big lot S&P extremely long. So we'll just see how that plays out here. Very interesting here. Very interesting development. And let's get right into the weekly. Now the weekly, remember, we only had a couple of days, a couple of down days. It's okay. It's going to happen. We've been up for like 6-7 trading days. So weekly we're back into the channel. That is a bullish case. We didn't have as much volume, but from the previous weeks, we've had an increase in volume. So let's see what happens here. But this is actually still, like I said, I'm looking for more upside probing. And the weekly chart, we're back above the lower trend line of this uptrend channel. So this is actually a bullish sign here, right, on the ES weekly. Now the ES daily, you could see we had the gap fill. It's the first area here, the first gap fill that's been concluded, and now we're just kind of testing here. And if I take this lower end of this ascending triangle, you'll see that it hit it right to the penny. Okay, sometimes it moves on the charts. So you could see that it hit right to the penny, and now we just tested the upper end of the ascending triangle. There's nothing wrong with that. I think that that's, again, constructive, right? You're up about 6-7 trading days. You break out, and what did I say when we broke out? More than likely, we'll test the bottom of this resistance, which is now support, and should excel higher now, looking for that 2760 area here in the ES. So I still like the market to the upside with some upside program. But remember, what we look at a technical analysis, we need to adhere in price as well when you're trading during the day. So we could say, okay, well, this still has a bullish bias to the market, right? There's no technical damage being done in just last week's recent. We had the gap fill up. We got that filled. We had the gap on the breakout here on Tuesday, and then Wednesday we topped as we filled the gap, and then we had Thursday and Friday back down again, which is fine. We did get an increase in selling. But that's okay. It was still above the TMT proprietary price channels. We held support of this ascending triangle, which you can see now is being more well defined as an ascending triangle, as you can see. So far so good. 2709 will be your next area of resistance, and then once we break that, we're looking for 2760. And I think the ultimate target here is going to be about 2785, 2790. Off this ascending triangle. Okay. Now, before I get into the NQ, let me just bring that down. Let me show you the 15-minute chart, as I always show you once a week. Again, no technical damage. We have higher highs and higher lows. We still have bullish symmetry in an uptrend channel. Now, let's take this. Well, take my marker. Can the overall picture be bearish? Right? Could this be maybe a bear flag, a big bear flag off a 15-minute chart? Well, sure it can, right? I mean, absolutely. So we have a possible bear flag, but we also have an uptrend channel. Remember, the bear flag is always created by higher highs and higher lows. So we need to watch that and pay attention to that as well. But as of right now, we got the first gap fill. All right, we had the gap fill broke back down. All right, we had this gap fill area that got filled. Now we have another area, a small gap fill area that needs to be filled at 2709, and that coincides nicely with our resistance off the daily chart, as you can see. So we're going to pay attention to that going into the next couple of days. I see, and we'll talk about the spiders, what we're looking at, but I definitely see a 27. I could definitely see us getting back up into here, and then we would reevaluate it and see where we go. Maybe we get back up to Wednesday's high. Right, we'll maybe get back up in here and then maybe go sideways a little bit, little consolidation channel, sideways, and then break out for the next gap area here. So that's possible. Remember, these are just scenarios that play out. We're going to pay attention to what price tells us when to get in and when to get in long or short, obviously, once the market has identified the trend for the day. And then you as a professional would identify which way we are headed for the day. Okay, and then now we're going to take a look at the NQ. The NQ did the same thing. We had the nice little gap fill here, nice 2-day pullback. And again, guys, and I'm just going to readjust these lines here. Get that right up in here. Okay, and you can see that we're just kind of testing the bottom of that the resistance area. So no technical damage. Let's see where we go. 68.31 and a quarter will be your area of resistance. Support will remain the lower end of the TMT proprietary price channels, which would be right up in here at 66.48 and a quarter. Transports, same thing. We took out a nice little triangle formation. Now we're back testing it. Right, the 193.75 held from last week, as we call this area here, and these are your two areas of resistance. But if we can get going and get the transport starting to lead again, then I suspect that we'll probably get up there again for the. We'll probably look to challenge those highs. IWM, pretty constructive, very bullish. We had the leadership role last week was the transports in a Russell. Secondary leader here is the Russell 2000. Back testing the upper end of the TMT proprietary price channel. That'll be at the 155 and a quarter. So looking good here. There's nothing wrong with this chart at all. We had a 2-day pullback off the doji on Wednesday. Again, not a problem. We've been up about 6-7 trading days. We still have the overall structure here of this bearish, of this head and shoulders pattern with the neckline coming down here. Remember, once we take that head out on a closing basis, then this pattern, this negative pattern, bearish pattern, excuse me, will be negated. Okay, we have the diamonds, and again, Dow Jones ETF, got the gap fill again. You can see repetitive patterns here, right? Right to the penny on the lower end of the ascending triangle. We got the first gap area. Next area is going to be, as far as resistance, going to be 251.11. Lower end of the TMT proprietary price channels will be your support for today, 243.54. Okay. And the spiders, same thing. Nice ascending triangle, back test. 270, remember that 270.30? We broke out, we did, and then we failed. Okay, Tuesday was the high of last week, so that high is going to remain intact. I'm looking at a possible rally, maybe Monday, Tuesday, at least back up to the 269-ish area, 269, even the 270 area here. Maybe we gap up. Monday's gap up, and then we start a little bit of a rally, and then we start to take that rally and continue to move higher. But 270 remains in play, 270.30. That's going to be the bigger area of resistance, and then we have the 61.8% retracement at 273.79. As you can see, we had an increase in volume to the downside, which is typical. As you can see, volume is greater to the downside than it is to the upside, which overall is not good and not healthy for the market. Okay. Qs. Same thing, had the gap up. Now we're back testing the symmetrical triangle. Caught this bottom line here right to the penny. You can see here 166.12 will remain big resistance, and then your closer area R1 resistance will be 164.72, and then 74, excuse me, and then 166.12 be R2. Okay, so we did get that gap fill here. Again, that's been filled. We're still looking for the next higher gap. Okay, and we did get an increase in volume to the downside Thursday and Friday. All right, now let's talk some commodities here. All right, now we talked about gold, and I've been saying gold. I don't think this rally is going to be sustainable, and we're looking for lower prices in gold. Well, the producers are looking the same. They're increasing their short bet, and as you can see from the previous week, now we're back increasing their shorts. So I think gold does go lower. How much lower? Well, we're going to find out. But the first area will be in gold is going to be that 1340 area, 1340-ish, and then we'd reevaluate. But we'll get into the charts now. Now remember silver. Remember silver, the retail crowd, the speculators, have been short silver, haven't been short silver in quite some time, in like years. And all of a sudden now the retail crowd is heavily shorted silver. Now the producers are joining in. As you can see, they weren't. They weren't short. They were short very little, but now they're actually increasing their short bet as well. Why? Well, because we had a big explosive move to the upside. So if gold does go lower, silver will follow. However, silver and gold are going to be two big plays at the tail end of 2018. Okay, gold's seasonality trends, they start to bottom out in August, and they start to rally going into the end of 2018, silver and gold. So we want to really pay attention to this, and we want to start accumulating silver and gold on any deep pullbacks. Okay? GDX, you can see here, again, not really doing much. I mean, we're sideways. I mean, we really have a sideways consolidation here. I mean, if I just take this horizontal line, you'll see what I mean. I mean, we've been sideways from February. So this is telling me that we're still weak, and we get a sell signal in RSI, and we're starting to roll over in MACD. So unless this really starts getting taken out to the upside, and 25 really needs to get taken out for a real big explosive move. And you can see what happened here in gold. We popped up to 1368. We broke down 1340. We took out. So now the next area is going to be 1332, 1312, then 1300. It's always a round lot number, and then we start to really excel lower. And I think that we're going to. I think this pattern will play out to a 1263, 1270, which is where I like to really start accumulating gold. Let's talk about crude oil. So we have the Saudis that are manipulating the oil prices. Okay, that's really important because now the producers are heavily shorted crude oil, right? But the overall structure is bullish, and we're going to talk about that in a moment. But then we have tough talk coming out of the Trump administration saying that the Saudis are manipulating oil, creating havoc for the retail crowd. That's not going to happen on my watch, yada, yada, yada. And what does that mean? Well, I don't know what that means because I don't know how he's going to control crude oil, which is a ginormous market. I mean, it's just almost uncontrollable. The Saudis are doing it because they're talking up their IPO that they want around 80. Now they're actually saying 100. So Where does crude oil go? Well, I'm going to show you a weekly chart. All right, so we know that the producers are heavily short, but let's take a look at the weekly chart. The overall structure is actually very bullish, all right, in crude oil, even though fundamentals, we did have a reduction in crude supply from 530 million barrels to 440, I believe. That's not really that bullish, right? I mean, that's not that much of a reduction, but it is still a reduction in overall supply. But I do think, again, with the shale guys in the States producing some heavy oil, everybody is selling, is hitting oil. So I don't think I think the technicals outweigh the fundamentals right now. But you know, with the Saudis manipulating oil, they say they want 80. Well, is 80 sustainable? Sure. We just took out last week the 200-week moving average, so that's very bullish. I would like to see a little bit more volume in crude oil, but still overall bullish. And if we take out 80, look at the thin zone we have here. Can we get to 110? I think it's absolutely possible, but not in a straight line. All right, even if we get to 80, that's going to be a tough move here. I think the first move, the next move is going to be we're going to pull back in crude oil, and I do think that the 58 area off the weekly, this is a 50-week moving average at 57.94, so 58. That coincides nicely with the daily chart, and you can see this here. So 58 comes into play right around here, right around this area at $58. That's that pullback that we had. So 58 would be the first area, then 55 next time as we would come back in again. But you could see we broke out and we've held the breakout for 3 trading days, so that's actually pretty good. I do suspect a pullback to fill this gap back into the 65 area, which coincides nicely with the 21 EMA at the 66.22. So this is 66.50 right up in here. So I think the pullback comes a little bit. We'll see what happens again with the API numbers and the DOE numbers Tuesday night, API Wednesday. But again, I do think that the next pullback, obviously pending any geopolitical uncertainty out there, and with tough talk with Donald Trump, I don't know if he can do anything, but I do think that maybe we get some weakness. And a lot of these oil stocks, you know, we talked about, we nailed the oil stocks. Here's Oxy, okay? If you look at Occidental Petroleum, OXY, I mean, this is a massive move, okay, guys? This is a really big move, and this is straight up for the last 8-9 trading days. We have a double top situation here. I'm looking for a pullback with some of these on certain names. You know, the DOs we talked about. Again, an explosive move up, and let me just get the chart up here as it loads. And you can see same thing, right? Beautiful base. All right, and it warranted, but we had a 2-day pullback, and we'll see where this pulls back. COP, another one. I mean, these are names that have already met their objective targets, and you do not want to get in. This actually made new highs. All right, and we talked about this off of here. So you take a look at that. SLB came out on Friday, and their projections, their estimates, I don't know, wasn't so great. And you can see you had the gap up and they had the gap fill area here. So we want to pay attention. This actually could still work out. Now, Monday, Halliburton comes out, HAL. So you better be very careful trading that until then those numbers come out. All right, and we'll see if we get weakness from these producers. If Halliburton comes out with the same as Schlumberger, there's something wrong here. So just pay attention, but they are going to move again at one point. But I'd like to see them reset now, since we have the first breakout, right? We usually get the breakout, and then we get the back test of the breakout, right? So here's your breakout base, right? Here, and then we should get some sort of a higher low from this previous low here, and then start to move higher for the next target. So that's what I'm looking for. So tomorrow, Monday, which is tomorrow, but I'm recording this on Sunday, we could actually see what Halliburton does, and we can actually participate in their earnings, either beat or miss.